Hi, and welcome to today's episode of WattWorks. This is a podcast segment from Edgecom Energy. Here today I have Rob Weir, who is our VP of DERs at Edgecom Energy. Today we're going to be talking about the energy market, answering some questions about batteries and what's going on in Ontario specifically. So what do you think makes Ontario an attractive market for energy and infrastructure developers today?
I think Ontario, after a long pause from a regulatory perspective, has really started to get their act together, for lack of a better term. So they've become very focused on decentralizing their focus from, I'll say, centralized large generators to now looking at where there's capacity constraints, where generation's required. Ontario is definitely renewable sort of technology focused. So as a result, they're also trying to look at or be more granular and more transparent as to where assets should be located. Well, you could say that Ontario already has a very clean grid. We have a high percentage of generation from nuclear and from hydro. But despite that, Ontario still has a strong focus on having virtually, I'll say, a zero emitting grid or a high reliance on renewable energy. So as a result, they're very focused on trying to put in programs in place that encourage battery energy storage, solar, geothermal, and this is all the way from our Class A industrials, which are our largest users, all the way down to residential.
So capacity growth is another really big topic, especially when it comes to the ISO and everything that's happening. So based on what you just said, with all the renewables and the diverse grid that the ISO or Ontario has to offer, what do you see in terms of capacity growth in the future?
Well, the numbers, there's a broad range. I think you said to me before we started the podcast, depends who you ask as to what you're going to get as an answer. But I think Ontario, like most jurisdictions, is expecting, I'll say, a 50% increase in demand, maybe even 100% increase in demand in the 2035, 2040, 2050 range. So I know that's a large range, but the grid's certainly looking at greatly increased demand, and this is partly due to electrification. It's partly due to data center growth. So this general electrification is all of a sudden creating these kind of step curve changes in demand. But you're also seeing that in the government regulatory policy. So all of a sudden, we're seeing a lot of expansion of market capacity programs. We're aware of the introduction of new market capacity programs. So kind of like as I was referring to earlier, you've now got, you will have capacity programs to suit just about or targeted at every customer segment in Ontario. You're also going to have capacity programs specific to utilities, capacity programs run by the ISO, and then you're probably going to have things called distributor system operators, so DSOs. So we don't know the exact path yet, but what we are seeing, or we will see, is kind of an explosion in this load shifting, and the government and the regulators trying to encourage people to load shift and give them those tools. So whether that's putting solar on your rooftop, or if it's putting in battery energy storage, putting in a building automation system, there's going to be a lot of incentives and programs to try and bring a revenue stream to a customer, which not only lowers their costs, but helps manage this demand on the grid. So, the approach to the government is kind of twofold. They're trying to, bring new generation, actual megawatts online, and then we're trying to shift load, and then of course there's conservation.
Which makes a lot of sense, and I think one of the biggest topics or things that you hear people mention nowadays when it comes to actual electrification, what you just spoke about, is the data centers coming online, vehicle charging. So where is all that capacity going to come?
Didn't even mention that one.
Right, and then that's such a popular one that people ask about. So going into these capacity programs that are going to be starting to enroll, we can see how those needs are going to be met. Now, specifically, you mentioned a few specific resources, so like battery storage. How do you think battery storage is going to play into these capacity programs specifically?
Well, I think in past markets and lives, you've seen, experience that customers demand, especially as you get down to residential, is what they call inelastic, right? So people actually want the benefit of curtailment, i.e. they want to lower their energy costs, but they don't want any discomfort or to change their habits or patterns in order to achieve that. So things like battery energy storage would allow a user, or allows any user of any type, commercial, industrial, residential, to shift or reduce their demand at a particular point in time, let's say a coincident peak with the market, but they don't have to change any of their operation. So they can discharge the battery, shift their load, and they get the benefit of it. The grid and the utility gets the benefit of it, but you really don't have to change anything. So I think it is battery technology evolves as it becomes, I'll say, cheaper, and perhaps the full value stack that the grid could offer is kind of directed towards the customer so that they can actually benefit from the service they're providing. I think you'll start to see the economics of battery energy storage across all customer segments become much more attractive.
And it's so interesting to live in a time where there's so much innovation going on, because apart from the innovation happening within the batteries themselves, something that we just discussed, data centers, they're also innovating as fast as they can to kind of meet those electricity demands and not have to look at other third parties or other solutions to bring into their operations. So it's going to be really interesting to see what happens in the next few years. But as that battery storage innovation competes with the AI center innovation, it'll be really interesting to see how they kind of come together and help the grid out and with the support that they need.
Yeah, it's interesting because data centers themselves are not, in a way, they're providing certain benefit as far as, I'll say, their analytical capability, but they're actually a bit difficult for a grid to manage, as I understand, and I'm not an expert in it, but data centers demand can drop 30% almost instantaneously. So the data centers are going to create unique demands on the grid and on utilities. I think as much as you see every jurisdiction where there's a lot of developers that want to bring data centers into the market, that's going to go probably a bit slower than what you expect because of the unique demands they're putting on the grid and the absolute size of them, which is massive. I think the developers themselves are going to get a bit frustrated because at the end of the day, you need the capacity in the system. So, and what you're also seeing now, and again, this is sort of colleagues of mine that are much smarter at this than I am, you used to see this kind of latency with data centers. So they used to want to put data centers very close to a market. There was actually a sort of formula as far as how far the data center could be from its customer base. As technology has evolved, those data centers can become more and more remote. And of course, remote's kind of interesting, except that there isn't always the capacity on the transmission system to have a remote data center. So there's going to continue to be this push-pull, but there's no doubt that the way AI is evolving, that it's going to be a big part of our future and a demand, within the electric market. So
going back to the Ontario grid, what new regulatory measures are coming into place? I mean, market renewal program has been something that's been buzzing around a lot in the energy industry. So how do you think that's going to play into the development of the
market renewal plan?
The market renewal plan.
But in any event, so that's probably the first major set of legislation for the Ontario government or for the Ontario system operator in 15 years. So it's really targeted to be more transparent. It's designed to give customers better price signals. It introduces a day-ahead market, which is a very familiar construct for US electricity markets that are deregulated. And really what they had to try to do is Ontario is built on these very large nuclear facilities that are kind of must-run base load. We put in a fair amount of wind and solar, and so you're starting to have this, I won't call it conflict, but a challenge in how to manage all these different generating resources, as well as how do we encourage continual development and penetration of solar energy storage, so it's not a generator. What they have, so market renewal plan is meant to be transparent, give strong price signals, but also strong locational price signals. So we now have locational marginal pricing, which is a new element to the market. It's new to Ontario, certainly not new to US markets and some other markets around the world. So it's early days yet, but the intention is to provide the right price signals to the developers and the customers so we get generation where it's needed, which is really in capacity constrained areas, which is primarily urban areas. So now it sort of loops back to you're seeing a proliferation of capacity programs. Really, that's load shifting because the urban areas are constrained, can't necessarily support large generators. But we've also got programs that are now tax incentives and other Ontario government funding programs to encourage rooftop solar, whose economics have, I'll say, dramatically improved in the last couple of years. So you can see how it's now all coming together after a period of, I'll say, a relatively stagnant period from a regulatory perspective. It's become very exciting if you're in the business of distributed energy resources, capacity markets, curtailment. If you look at microgrids, a lot of the MUSH sector customers, you're seeing hospital campuses, university campuses look, and as they've tried to target going to net zero by 2050, they're bringing in sort of larger ESCO firms and putting together a roadmap on how they can be net zero by 2050. Part of that is electrifying. We talked about that. So electrification of boiler plant, modernizing building control systems. You're now seeing HVAC controls where they're actually being installed with demand response controllers pretty much built in. So all of a sudden, after this, again, relatively quiet period, you're seeing a rather creative and aggressive push towards technologies that really decentralize the generation construct, but also encourage and providing tools for customers to reduce their costs. And at the same time, then we're hopefully going to get the benefit of more resilience on the grid, because we'll be, we're diversifying our asset mix, energy storage, solar, even EV charging portfolios can be turned down, right? Most people, that took me a while to get my head around that. But you can definitely, during those periods of coincident peak curtailment, in fact, we're working with currently with a EV charging company whose software, and it actually states on the charger, during certain hours, the capacity of the charger may be turned down. So you're starting to see these things, and for me, it's very exciting because, again, I've kind of been through a period where, we deregulated the market, but we weren't, from a regulatory policy perspective, we really weren't making the market that dynamic.
And you mentioned something that I think is very interesting. So this new market renewal program, with it being somewhat more similar to what's going on in the US, do you see some of those like foreign entities, companies from the United States, those big ESCO companies coming here and having almost an easier transition into the Canadian market?
I think you mentioned ESCOs, so some of the large ESCOs are already here, right? So I think then you're talking about maybe that layer below that, or equipment vendors or developers who are not necessarily ESCOs and offering kind of these financing these complex solutions to large, I'll say high credit entities. Now you're going to manufacturing facilities and saying, does it make sense to put in rooftop solar? Does it make sense to put in energy storage? And certainly the programs and the focus on capacity markets, certainly global adjustment, which is our big giant capacity charge here in Ontario, still remains. So there's some very attractive market mechanisms to help make it more economic. I think what will appeal to US developers is a market construct that's a little bit more familiar, has greater transparency. So, I don't work for, let's say, a grid level developer, but, Ontario is also going through I'll say a multi-year process of acquisition for grid level renewables, gas-fired generation, not supposed to say that word, but it's needed in the mix, and solar, right? So, and wind. So the government's got a very active program. They're giving out long-term contracts to people for capacity and energy. And then from an operator's point of view, you're starting to get a construct that has greater transparency, is a little less mysterious from a, I'll say, real-time market operations perspective.
Okay, so let's talk about what's new or in the works with the market regulatory structure.
Okay, so in addition to the market renewal plan, which we've talked a bit about, the OEB is now talking about a new program where they would provide an opportunity for local utilities to actually earn a margin or an incentive on offering capacity payments. So that might not sound like revolutionary, but really it's new to the market, and it's going to encourage utilities of all sizes to offer specific capacity contracts or programs to customers to put resources where they have system constraints. So that's kind of an exciting thing because the utilities generally, and I don't want to speak for them, but it's hard for them to act if they don't have approval from the OEB or rate structure to do that. So that's a really exciting development and should really encourage the development of distributed energy resources, from the large utilities all the way down to the smallest utilities across Ontario. The other really cool thing is virtual net metering. So the government just released new legislation that approves corporate PPAs, which are related to virtual net metering. So the simple construct of that is that you can build grid level solar in Northern Ontario, and if that developer, they need a guaranteed revenue stream, contracted revenue stream in order to finance and construct those projects. In the past, in the most recent past, those developers have all relied on PPAs from the ISO, essentially the government. Now they've opened up a new path where renewable developers can sign contracts with corporate partners. So take large industrial clients can sign long-term power purchase agreements with grid level developers. Now that in itself isn't new, but the corporate virtual net metering or corporate PPA allows for remote generation to appear on your bill as if it were generated on your site. So you're going to get a real-time offset for each megawatt hour generated by the remote generator, renewable generator, on your bill. So it's virtual net metering. So that's a really exciting, I think, construct for the renewable energy sector. It gives them an opportunity to find a long-term contracted revenue stream. And you've seen in various jurisdictions, and you're starting to see this more in the news, where you're seeing, I'll say, some of the more prominent worldwide corporations where they've got strong renewable goals or ESG targets, they're signing corporate PPAs with renewable developers. And then the last thing is that you're seeing more and more within the OEB and as the utilities go in for their annual kind of rate filings, is you're seeing an encouragement from the OEB for what they call non-wire solutions, which is also called non-wires alternatives, which tends to show up as distributed system operators, so DSOs. So we've seen 2 or 3 examples of local utilities running kind of pilot project DSOs. And the really cool part about a DSO is it encourages these smaller targeted developments because the utility essentially aggregates each of those projects and they bid that capacity as an aggregated block in a common zone, so let's say their utility territory, into the ISO. So these DSOs allow and encourage smaller development and mostly at commercial industrial clients, but they aggregate that load. So again, something that's changed just in recent times and really is just being rolled out is a strong encouragement of what they call non-wires solutions, non-wires alternatives, or you may see it as a DSO. So again, another vehicle for customers to get paid to shift load or put in renewable energy resources.
So it seems like there's a lot happening in the market, specifically in Ontario. I think that's going to wrap it up for today in terms of questions. I'd like to thank you for joining us for this episode of WattWorks, and we'll see you next time. Thank you, Rob.
Thanks, Courtney.